Fusion Mobile, quality e-learning experience on the go.
You are welcome to Fusion Mobile e-learning platform. I'm Olokobi Pelumi by name, the accounting tutor, and now in this lesson we'll be treating control account, and we'll be looking at the meaning of control accounts, advantages of control accounts, sales ledger control account as a form of what aspect of control account, and we'll be looking at purchase ledger control accounts. Okay, the meaning of control account. If the trial balance fails to agree, that is the total of the debit side refuse to be in agreement with the total of what credit side, that means that there is an error. It serves as an indication of errors in the book. So in a small organization in which the ledgers in such an organization will be relatively small, that means locating error will be very easy, while compared to a very large organization in which the ledgers in the book of such an organization will be numerous as a result of the size of the organization. So locating errors in such an organization will be difficult because of the relatively large numbers of ledgers in the organization. So a system has to come up in order for us to easily locate errors in the ledgers. That actually brought about a topic in accounting, control account. So the purpose of control account is to easily locate errors to a particular ledger. So when talking about control account serves as a summary of total entries of all individuals account in a particular ledger. So it serves as a summary, it summarizes all of the entries of all individual ledger account in a particular ledger. So that is the meaning of control account. Now, advantage of control account. According to my explanation, what advantage do you think control account can have? Number one, fraud can it enables to locate errors easily. So that is one of the advantages. Error can easily be located to a particular ledger, since we can have a check on each individual account in a particular ledger. So error can easily be located in a particular ledger, since it summarizes all of the individual accounts in a particular ledger. And again, one of the advantages is that frauds will be minimized, since in the account is kept as a check. So there will be a check in all of the individual accounts, that is the account of the debtors and the account of the creditors. So errors by the cashier will be checked in the book. And also, the control account enables us to determine the balance of the debtors and the balance of the creditors within a period. So the balance of the debtor and the balance of the creditor can easily be determined through control account. And control account enables us to find the missing figure in the account. Control account helps us to find the missing figure in the account. So at a stage, we'll be restricting you to two particular and two important levels of control account, which is sales ledger control account and purchase ledger control account. You can also call the sales ledger control account as the total debtor control account. You know, I said control account serves as the total entry or summary of individual accounts in a particular ledger. So you can call control account as a total account. So that's the reason why we call the sales ledger control account as total debtors control account. And it also, you can call your purchase ledger control account as the total creditor control account, which shows the total entry of all the individual personal accounts of all the debtors or of the creditor in the debtors ledger. So the sales ledger control account gives us a summary or total entries of all individual accounts in the sales ledger or debtors ledger, while also purchase ledger control account gives us a total summary or total entries of all individual accounts in the purchases ledger or debt creditors ledger. So let's look at this sales ledger control account, the layout of sales ledger control account or total debtors control account. So this serves as balance brought down, balance of the debtors at the beginning, of the total debtors at the beginning, assuming this. So we have our credit sales when the goods are sold to the debtor. That means all of the credit sales within the period will be taken to this debit side of the sales ledger control account, because it serves as the what debtors account. So when the goods are being sold on credit, it means their indebtedness have to be increased. So what happens? Credit sales will go to the debit side of the sales ledger control account. So we have a credit sales comes here, and again dishonor check. If the debtor send you a check and the check is being dishonored, so it comes here, it comes to the debit side of the sales ledger control account. That means if this check, if a customer sends you a check, what happens? You are going to credit the account of such a customer, of such a debtor. But if such a check is dishonored, what will you do immediately? You debit the personal account or the debtor. That means the personal account, all of the dishonored check within the period will come to the debit side of the sales ledger control account. So, and you should know that all of these sales is not being gotten from the individual account or the debtors, but rather the credit sales is gotten from where? From the sales ledger, from the sales day book. So all of the sales, all of the credit sales within the period can easily be determined, and that goes to the debit side of the sales ledger control account. Same thing applies to the dishonored check within the period. So charge to customers. So any charge to customer within a period, if the customer is being charged within a period, it also goes to the customer, to the debit side of the sales ledger control account, because we have to increase their indebtedness. Now the next thing on the credit side, we are going to have on the credit side that we are going to have return inward. When there is any return within the period, what will happen? That serves as a reduction of the debt of the debtors. So we have to credit their accounts. So when we have discount allowed, if discount is being given to the debtor within the period, what will happen? That serves as a reduction of their indebtedness. So the account will have to be credited. Same thing when we have bad debts within the period. So what will happen? There will be some reduction in the what? In the debt of the debtors. All of the bad debt within the period will also go to the credit side of the sales ledger control account. Now the next thing is payments, cash paid by customers. So that comes here also. So when the customer pays some cash to us, the account will have to be credited. All of the cash payments will come here. So check received from customer. So when all check you receive from customer, we also goes to this place. So the account will have to be credited. And if such check is dishonored, what will happen? That will go to the debit side of the customer's account, which is the sales ledger control account or total debtor control account. Now we can also have contra entry. So the contra entry means, okay, the customer or the debtors will also can also be a supplier to the organization. The supplier will be a customer. Thereafter will also be a supplier. So what will happen is for us to credit the cost debtor control account to cancel the amount of the debt, and also debit the supplier's account to cancel the amount of the debt to the supplier. So the contra entries generally serve as a set off. So you can also be called the set off. So we set it off with the total creditor control account or purchase ledger control account. So that also comes to the credit side of the sales ledger control account and goes to the debit side of the purchase ledger control account. So when this account is being balanced, we are going to have balance carried down. balance carried down now serve as the total figure of the that serve as the total figure of the debtor, total debt at the end of the period. To now serve as the balance of the debtor. If serve as the total balance of the debtor in the period. So if this does not equal to the individual account, when we add in the period, when we add all the individual accounts in the periods, that is the personal account of each debtors, when we add it together, it must equal to the total debt we have there at the balance of debtors. If it's not equal to it, that's about an indication of error in the book. So we can look, okay, that the error in the book is made in the what? In the personal account of the debtor. So that's one of the check, that is one of the uses of control account, to serve as a check and to locate error easily. So I'm just explaining this for a better understanding. So we can easily determine the balance of what debtor within the period, which serve as what? Total balance of debtor within the period. So we can serve as a check to us, and if we want to check this, we can what? Add each individual account of the debtors, add it together, and that must be equal to the total debtor we have here, total debtor balance we have here. If it's not equal to it, that's about an indication of error. So that means we can easily locate this error to this particular ledger. So we can have a balance breakdown now. So we have this. So these are about sales ledger control account. This is all about sales ledger control account. Now the next thing is for us to move to the purchase ledger control account. So we're going to have purchase ledger control account. So purchase ledger control account, we have that, which serve as total creditor control account. So first thing, so the account of the creditor must have a credit balance. So we are going to have balance brought down. I will have a credit balance brought down, which serve as total what? Total balance of the debtor, of the creditors at the beginning. So the next thing, we have a credit purchase in the period, which can be taken from the purchase day book. We are going to have it here. So the next thing is to have check dishonored. If the check we give to the what we send to the supplier is being dishonored, what will happen? Our account we have to be the supplier account we have to be credited. So the next thing now is charge on overdue account. Now the supplier can also charge us on an overdue account. So that way charge on overdue accounts. So when a debt is become overdue, so they can charge interest. So that will go to the credit side or the supplier's account or total creditor control account. So all of the charge or all of the interest on the overdue account will go to the credit side of the purchases ledger control account. So we have it here. Now the next thing, we can easily have discount received. The discount will be received from the supplier. Total amount of discount will be received. We go to the debit side of the supplier's account or total creditor control account to less the indebtedness in the period. So that comes here. So this in return outward also. When some goods are being returned to the supplier, what will happen? Their personal account has to be what? Debited. So all of the return outward within the period will come here. And that can easily be taken from the what? From the return outward day book or purchases return day book. So we're not going to take that from each individual account. No. We're going to take that from what? From the return outward. So the return outward will be what? Will be debited to the purchase ledger control account of the supplier. So to deduct the total debts within the period. Now the next thing is check the supplier. So we have that will also be debited to the supplier's account or total debtors control account, because that will serve as a deduction of debt within the period. So the supplier's account or total creditor account will have to be debited once there is cash payment or check payment to them within the period. So now the next thing we have is cash payment to supplier. So once there is cash payment to supplier, what will happen? The account will have to be debited also. So we have that here. Now contract entry as stated in what? In the sales ledger control account. So whenever we add the contract entry, what will happen? The contract entry the instance is served as a setup. So that comes up when a particular person is a supplier and also serve as the customer of the organization. So when such thing occurs, what will happen? We have to cancel the debt in the sales ledger control account by crediting the sales ledger control account, and also cancel the debt in the purchase ledger control account by debiting the purchase ledger control account. So it serves as a set off. So when we have a set up or contra entries, it's for us to credit the sales ledger control account with that figure, and also debit the purchase ledger control account with the same figure. So we have contra entry set up. So we have this. Now the next thing is to balance the account. So we are going to have balance carry down in this place. So when our balance carry down, balance this, and that is all. So the next one will be the balance brought down, and that will represent the total amount of debt to the supplier. So that gives us the total creditor balance at the end of the period. So this total balance of creditor at the end of the period, if all of the individual accounts of the creditors is being added together in the personal account of each creditor, that balance must be amount to date. So if it is not equal to date, that serves as an indication of error within the period. So error can easily be located to this particular set of ledger, which is the purchase ledger control account. So what applies to the sales ledger control account and purchase ledger control account can also be applied to all other ledger like general ledger and also private ledger. You have to easily locate error. Now we'll be taking an illustrative questions now on sales ledger control account and purchase ledger control account. Okay, we have an illustration now. That's an example, and the following balances were extracted from the books of Lola Enterprises on 30th October 1996. We have the purchase ledger balance, which is the balance of the debtors at the beginning, as 1/1/1996, which is 7,320. We have sales ledger balances, which is debit, must always be on debit, at 1/1/1996, 79,480 naira. So we have purchase day book, which serves as the credit purchases. I said earlier that all credit purchases will be taken from the purchase day book. So we have this serves as the word credit purchases within the period. So we have 904,540 naira. We have the sales day book that serves as the credit sales within the period, because all of the credit sales will be taken from the sales day book within the period. So that give us 775,300. Now we are asked to prepare. You are required to prepare the debtor control account, which is the sales ledger control account, and also creditor control account. So let's do that. We have debtor control account. And we have creditor control account. So the first balance we have here is purchase ledger balance, which is credit balance as at 1/1/1996. So that is credit balance. This is going to give us balance brought down. Okay, sorry, purchase ledger, this is purchase ledger, that is creditor control account. We have balance brought down. That will give us 75,320. Now the next thing is sales ledger balances, which is debtor control accounts. So that will be balance brought down. So we have how much? We have 79,480. Now the next thing we have purchase day book. That serves as what? As a credit purchase within the period. So we have our credit purchase. So that comes to the credit side of the creditor control account, 904,540. Now we have sales ledger, sales day book. that is sales day book. That's about the what credit sales within the period, because all credit sales will be taken from the sales day book. So we have credit sales that give us 775,300. Now the next thing we have return outward date book. That serves as a return outward within the period. So return outward will be taken to the debit side of the creditor control account. That's about the reduction of the debt of the supplier. So we have return outward here at the debit side of the creditor control account. Return outward. So that gives us 39,600. So the next thing is we have return inward day book. Let's have as total return inward within the period. That will be taken to the credit side of the debtor control account. We have return inward. $141,800. Now the next thing is cash receipt, check received from customers. Once check is being received from customer, what will happen? The account has to be credited, that is in the debtor control account or in the sales ledger control account, which they are the same thing. So we are going to credit the debtor control account to reduce the indebtedness of the customer. So check received. So we have 566,800. So the next thing we have is check paid to suppliers. Once check is paid to supplier, what will happen? We debit the account of the supplier, which is the creditor control account. Paid to supplier, we have to debit that. So the account will be debited. So we have 618,600. Now the next thing we have is cash refunded from suppliers for overpayment. Cash refunded from supplier for overpayment. When cash is being paid to the supplier, what will happen? The supplier's account will be debited. But once there is cash refund, that means the supplier's account have to be credited, because the supplier is the giver of the fund. So what will happen? We have to credit the supplier's account directly. So cash refund, that serves as dishonor check. That's cash refund dealt by the supplier. Cash refund, so that will be credited to the supplier's account, which is 2,400. So the next thing we have is discount allowed. So that means discount is being given to the supplier, to the customer. So once this discount is being allowed to the customer, the personal account of the customer will be credited. That means debtor control account will be credited. So we have discount allowed. I'm going to credit this. By how much? Discount allowed is 37,740. Now the next thing is discount received. So once discount has been received from the suppliers, the personal account of the supplier will have to be debited, which is the creditor control account. So that means we are going to debit this discount by discount received, which have been explained in the format. So which is 26,780. Now the next thing we have is credit note received. When the credit note is being received from the suppliers, credit note received from the suppliers. Credit note is one of the source documents, and when credit note is being received from the supplier, it means our debt has been reduced. That serves as debt reductions. So when such credit note has been received from the supplier, it means our debt is being reduced by the supplier. So that means we have to credit the creditor control account, because credit note received serve as the debt reduction. So we have credit note received from the supplier. So credit note received, which is 2,800. Now the next thing is debit note issued. When debit note serve as what? As the what? As the source documents. So when the debit note is being issued out to the customer, that serves as the what? As an increase in the indebtedness of the what? Of the customer. It means the debt of the customers has to be increased, and that can be due to undercharge on the invoice or some certain reasons. So it means if debit note is being issued, the personal account of the customers have to be what? Increased by the amount of the what? Debit note that is being issued. So debit note becomes to the debit side of the total debtor control account. So debit note issued will be here. So which is how much? 5,300. And that is all. So that is all on the details. We don't have any more details. The next thing is to balance the account. Now the first thing we are going to do is to add all of the debit side of the total debtor control account. So we have 79,480 plus 775,300 plus 5,300, and that gives us 860,080. So we can add the credit balance also. 141,800 plus 566,800 plus 37,740, and that gives us 746,340. So we can find the difference. That's about the balance carried down. So we can balance our accounts. So that is 860,080 minus the total credit balance. Then we have 113,740. So the account will balance instantly. So that is the balance of the debtor at the end of the period. So we have balance brought down 113,740. So that's the balance of the debtors within the period. And also we can balance the creditor control accounts by having the credit balance first, because that will be a greater balance. So let's have it. That's 75,320 plus 904,540 plus 2,400. Then we have 982,260. We have 982,260. Then we can just deduct the debit side to have our balance carried down. So we have 39,600 plus 618,600 plus 26,780 plus 2,800. So we can then have 982,260 minus all debit balances. That gives us balance carried down is 294,480. So we can have balance brought down, which is 294,480, which serve as the balance of the creditor at the end of the period. So in this lesson, we've done everything on control accounts. We talk about the meaning of control account, the advantage of control account, and the sales ledger control account, and the creditor ledgers control account. So if you are having confusion with this topic, do not hesitate to replay the video, and some exercises will be displayed on screen. Do well to attempt such a question. Thank you.